Let me tell you about the greatest robbery in modern financial history. And no, I'm not talking about something that happened years ago. This is a heist that just went down, and it was engineered specifically to trigger your deepest financial fears, to force you to sell, and to make absolutely sure you walk through the wrong door at the worst possible time.
And look, that is not a metaphor. Right now, today, that choice is real. The architects of this system are using every psychological trick in the book to shove you towards oblivion. You know why? They need your assets before you figure out what they just pulled off.
Okay, so let's dive right into the crime scene. Just 2 weeks ago, silver was hitting its all-time high, $122 an ounce. The momentum? It looked absolutely unbreakable. Then, bam, January 30th, the floor just vanished. A 36% intraday massacre. And then, just yesterday, they did it again. A second coordinated dump to wipe out anyone who dared to buy that first dip. It was the final, brutal shakeout.
But here's the mystery at the heart of it all. While this was happening, every single fundamental was screaming higher. Central banks, they were buying physical metal by the ton. The supply deficit? That's not an opinion. It was a mathematical fact. So why the crash? Well, the answer isn't in the headlines. It's carved directly into the price chart, like a confession written in code.
And this right here, this is the key to that code. Now, this isn't just some random shape on a screen, you gotta understand. This is the single most reliable bullish reversal pattern known to technical analysis. It's called an inverse head and shoulders. And when this pattern completes, history shows the price explodes higher over 75% of the time. This isn't guesswork, it's pure statistics. And they just finished painting this masterpiece for everyone to see. Let's break down the anatomy of this whole operation. Think of it like they're coiling a spring. First, you have the left shoulder. They tried to break the price below $74 and failed. Then, the head. They unleashed an absolute terrifying system purge, hunting every last stop-loss order to flush the market all the way down to 64. And finally, the right shoulder. Yesterday's final punch, the last attempt to see who would flinch. And here's the most critical detail of the whole setup. The lowest point of that final punch, $73.86, is significantly higher than the low of the main panic. In technical terms, that's called a higher low. It is the market screaming in the language of mathematics that the sellers are completely exhausted. They've got nothing left. Their power is gone. So where does this all lead? Well, the math of this pattern isn't ambiguous at all. You simply measure the distance from the bottom of the head to the neckline, that's $20, and you project it upwards from the breakout. The calculation gives a precise technical price target of $104. That isn't a guess. It's the destination that's literally been encoded into the structure.
But how did they engineer that final crash to complete the pattern? They used a psychological weapon, deployed with surgical precision. At 9:14 a.m. yesterday morning, this 13-word alert hit every major trading desk on the planet. Just 13 words, but they were designed to attack the very foundation of the entire precious metals bull market, the de-dollarization narrative.
The effect was instantaneous. High-frequency trading algorithms, which, by the way, controls 73% of this market, scanned the keywords Russia, dollar, reversal, and just hit sell. 47,000 contracts, representing 235 million ounces of paper silver, were dumped in 15 minutes. A human trader couldn't even finish reading the headline before the damage was done. Except it was a lie, a complete and total fabrication. The rumor cited anonymous sources, but here are the actual on-the-record statements. Putin himself, the era of dollar dominance is ending. The Russian finance minister calls the policy irreversible. The Russian central bank just days ago confirmed it's increasing its gold reserves. It was weaponized disinformation, plain and simple. But, okay, that raises the real question, right? If the fundamentals are bullish and the news was fake, how can the price fall so hard? It's because of a hidden pressure release valve that most investors have no idea even exists. The mechanism is in China, and it's called the silver seesaw. You see, in China, there are two parallel silver markets. First, you've got the official government market, where you pay a hefty 13% tax and supply is now being rationed. But then you have the second, unofficial scrap market. We're talking melted jewelry, electronics, old silverware, and that's completely tax-exempt. So when the official supply gets tight, they just open the scrap floodgates. This flood of recycled metal creates the illusion of a massive supply, and that crushes the price globally. But here's the fatal flaw in their plan. It's not sustainable. It is a one-time liquidation of stored family wealth. You can only melt down your grandmother's silverware once, and that well of scrap metal, It is finally running dry. And this all leads to the most obvious question of all. If the paper market, the price you see on your screen, says silver is so abundant that it can crash almost 40%, then where is the actual metal? Because in the real world, it has simply vanished. Seriously, try to buy physical silver right now. Go on, I dare you. Dealers are completely sold out. The premiums, that's the cost above the paper price, are exploding to $30, $40, even $50 an ounce. Mines are literally withholding supply. Wholesalers have locked their vaults. The paper price is a fiction. The physical market is screaming that a severe shortage is here, right now. So why would they go to such extreme lengths? Because they see the end game. The US government is now carrying $38 trillion in debt. This isn't a system anymore. It's a mathematical certainty that's heading towards a very messy conclusion. And when confidence finally breaks, the only tool left is the printing press, on a scale that will literally make history. And this, right here, is the institutional playbook. They engineer panic in the paper markets to shake you out of your real, physical assets. They're tricking you into selling them insurance on a burning building for pennies on the dollar. Your panic is literally subsidizing their preparation. So what does all this mean for you right now, today? Based on this analysis, here's the tactical roadmap for the critical next 72 hours. There are really two clear paths forward. We are watching the $74 level like a hawk. If it holds, the bullish pattern is confirmed, and the objective is that $104 price target. Now, if they somehow manage to break 74, the next major support level is down at 64. But listen, that is not a signal to panic sell. It's a signal to acquire every physical ounce you can possibly get your hands on. Both paths lead to the same destination. The only variable is the route you take to get there. So let's just recap the battlefield. The price is sitting at a 37% discount from just 2 weeks ago. A statistically proven bullish pattern is locked and loaded, pointing to $104. The physical market is in an extreme shortage, and the two primary suppression weapons, a fake news story and a finite supply of Chinese scrap, have been spent. They're out of ammo. So, if you held through these last 2 violent weeks, if you watched that value drop and you refused to panic, congratulations, you just passed their test. You see, the institutions had to clear out anyone who would fold on the way to $150, $200, or even higher. They needed to see who had real conviction, and you proved you have it. The final shakeout is complete. The weak hands are gone. The pattern is valid, and the launch sequence is initiated. The greatest robbery in modern financial history has just set the stage for the greatest wealth transfer. So the only question left is, when that door to generational wealth swings open, will you be ready to walk through it?